Hi everybody, welcome to another update on the stock screener. I wanted to recap on Danaos Corporation. I did a video 3 years ago in 2021. You can still find it. I said that it was a pretty good company with a PE of 6 and that it would go higher. Now, what has happened since then? It has done absolutely nothing. So it's still at the same price, as you can see here. Now, did the company actually change? Is there anything that changed with the company in those 3 years? And you can still buy it at the same price. So that's what we are going to look at today. Is Danaos Corporation now even better than in 2021? So for that, we are going to look at the balance sheet first. So here we have the latest balance sheet, 2023. And we are going to compare it to 2021. So let's see what changed. Assets. So we had 350 million in current assets. Now it's 500 million. So that has already improved by 200 million. Good. Non-current assets, as you can see here, 2.8 went to 3.1 billion. Also good, has gone up. So on the asset side, we have added around 450 million in assets. So they got more ships and they got more cash, current assets, very good. Now on the liability side, current liabilities was 200 and it's gone down to 160. Debt, 1 billion in debt is now only 400 million in debt. And some other liabilities also gone. So from 1.2 billion long-term liabilities, it's more than half cut to 476 million. So this balance sheet has immensely improved, immensely. Equity, so the book value, 1.7 billion, has doubled to 3 billion. So they have actually added 1.3 billion in equity over those 3 years. That's value creation. So they have added more equity since 2021 and the share price is still the same. And this is a superb buying opportunity. You can get the same value of the share, but the underlying book value has doubled, essentially. It's still at 1.5 billion market cap, and the book value is 3 billion. So you're buying this at half book value. Okay, so you could also say maybe the earnings are not so good. Maybe the earnings are not so good. Okay, let's compare the earnings between 2021 and 2023. So yeah, this is June and this is September, but 3 quarters. Let's look at income from operations. It is currently at 150 million per quarter. What was it in 2021? 72 million. So it has doubled. The income from operations have doubled. Right? So not only is the book value, the balance sheet, much better, all the debt paid off, doubled equity. Also the earnings are up. And the share price has not even gone up since 3 years. So I don't understand why this is so cheap. I will probably be buying this if I have cash somewhere, but currently not yet. But if some of the liquidity comes free, I will probably start buying this. Hopefully not too late. So this is the current NPV flowchart, and you can use NPV flowcharts for everything. And this is for the shipping company here. That's a container shipping company, and they have recently also bought some dry bulk vessels, 9 of them in 2023. They actually know exactly where the cycle is right now. So the cycle for bulkers is now bottoming out. This is from 2023. So this is now bottoming out and going in a bull market. The tankers were in a bull market and they are going to go in a declining phase now. So they are getting into the right sector now. They are getting into the bulkers, dry bulk vessels, and those typically follow the container ships as well. You can see container freight index is up, probably due to Red Sea problems. But yeah, it's looking good. It's up. And also the Baltic Dry Index is also trying to bottom out and go higher. So I think we are in the correct cycle for Danaos. Here you can see enterprise value in 2021 was 2.7 billion, has dropped to 1.7. So very cheap to buy. Book value doubled since then. Interest payments were at 70 million, now only 20 million. So they don't need to pay as much interest anymore because they paid off a lot of the debt. Net income has gone up. So PE ratio was 7, now it's only 3.5. So extremely cheap. The upside could be a double. Those ships have 10 to 15 years life still. So we could get to here. Yeah, it's probably a double worth. Depends, of course, on the charter rates. Those can fluctuate. So let's say 50% upsides minimum. At least we should go to the book value of 3 billion. Let's say 2.5 billion. So that's an upside in market cap of 50%. So looks like a very good company. It's deleveraging, paying off the debt. Now they have no net debt anymore. Container ships are sailing at lower speeds due to the emission things, environment. So you will need more container ships this way and more ton miles as well. Order book looks pretty low, so not a lot of extra container ships getting built later on. This is the life of these vessels. Yeah, 14 years, 11 years old, some 25 years. Yeah, some of them need to be demolished at some point, 16, 17. I think still some years left, 15 years of life for these vessels. So yeah, I think there's upside. One caveat is that if we do have a recession coming, which is possible, then we could see a dip. So if GDP growth goes down, slows down, then you can see the containerized trade growth going negative. But yeah, we are not expecting that yet. Everyone is talking about a soft landing or no landing, so this GDP growth could easily stay at 2%. So I wouldn't be too worried about a recession. I think this company will be doing great, is earning money. In a few years, it will definitely go up. And you can see that here already, this technically is a breakout, retracement, and then now we are starting to break out of resistance and going much higher. That's what I see here. And it's also fundamentally sound because we are trading below book value, higher earnings, debt has been paid off, less interest payments, etc. Looks great and bottoming out in this cycle. So just wanted to recap, revisit Danaos Corporation. It's a very good company, and I'll see you in the next video. Bye.